And looking at the market, pretty dull in yesterday's trading session, but turnover also coming down.
Yeah, we're seeing a couple of challenges on a number of fronts. First of all, just being the way the economy is structured around the government. So we are exposed to during mid-year, just after the what you call the budget. We have cash flow issues because government processes and procedures. So we expect that to ease up a bit. Of course, like you said earlier on that central bank is mopping up a bit of liquidity, so that affects it as well. And obviously, lukewarm participation from foreigners also kept trading a bit lower than what you're used to.
So the market looking quite dull, but what are investors doing with their money right now? Which sectors are they perhaps putting their money in at this stage?
Yeah, we've got a number of, the debt market still seems very interesting to them. And on the other hand, we've got a number of rights issues coming up. So perhaps some of them are keeping a bit of dry powder just to be able to participate. We've seen Diamond Trust do a rights issue. NIC Bank is right up next. Standard Chartered thereafter, and a couple of others I suspect will be coming from at that point.
Talking about rights issues, it looks like it's the right time to come to market. We have Express Kenya also announcing that it's looking to raise about 1 billion shillings through a rights issue. Could you talk us through the company? We know that it's just just entered into profitability now recently with their results.
Yeah, well, the results came in. If you're able to, if you look at the results in depth and you isolate the operations of the company, the numbers are pretty dismal. Have been struggling for a while, and they are hit with what you might call industrial action towards the beginning of this year, end of last year as well. So the company has been having quite a bit of issues. It's showing up in their numbers right now. So perhaps they probably want to turn it around. Probably need a funding for that. And rights issues make a lot of sense for them, especially right now when you've come from a time of volatile inflation and interest rates. So it makes, I mean, people fear right now taking up debt. So it makes a lot of sense to do a rights issue, because that's the most stable source of financing they can get right now.
Like you say, there's a lot of issues going on at the company right now. They're also looking to diversify their business to include real estate development. Is this the right move for them?
Well, if they've got land assets, rather than sell land as is just to raise financing, it makes a bit of sense to develop those parcels of land and generate value from that, and see how far forward they can move with that. And also, it makes a lot of sense for them in terms of diversifying away from the transport and logistics business, where fuel prices have been quite volatile. So so probably they need a place. If they need a place to stabilize their cash flows, perhaps it makes a bit of sense for them.
East African Breweries was among the gainers in yesterday's trading session. We're looking for full-year results to come through on that company. Half-year results were pretty good. Your expectations on the kind of results we could see for the full year?
Well, we expect a bit of growth coming through from the growth of the Tanzanian plant, where they bought Serengeti breweries the other day, trying to turn it around. I think they had quite a bit of success. Beer growth from the Tanzanian market was phenomenal. We expect that to push on to continue as they continue to make their presence felt in that market. Of course, again, we also expect spirits which have good margins to help with that as well. So largely we are quite bullish on that stock.
So bullish
with regards to its results.
Bullish on the stock, but are you buying it at this stage at 230 shillings?
Well, it may sound a bit rich we take heart from the fact that it has quite a strong balance sheet. They were able to borrow 20 billion Kenya shillings for the operations of partly to finance the operations of the Tanzanian plant, and we think they still have quite a bit of more debt capacity on that balance sheet. So on the whole, it might seem a bit rich from an earnings point of view, but if you look at it from the balance sheet perspective and future possibilities, it makes a bit of sense to participate in that share right now.
Okay, let's move on to the fixed income market. We have the 2-year bond closing on Tuesday. What kind of yields can we expect coming through on that front? We have seen yields on the 182-day Treasury bills coming off. Your expectations for the 2-year bond?
2-year bond, we're looking at anything between 12 and 13%. It's a wide band, I know, but coming at a period where inflation rates collapsed the way they did, it's a bit difficult to gauge the market. It's quite a bit volatile. And look at the government finances. I think they're not too bad in the short term. And I'm sure government will be gunning for low yields, so they may have low cut-off points. So if we look at the whole picture, then we think that yields will be coming down between 12 and 13%. Even though we know the last auction for the 1 year Treasury bill came in at 13%.
Well, then next week's session, you've only got 4 days, lucky you. Now, let's look at some of the stock picks that you'll be looking at in next week's trading session. I know that the banking sector has been a favorite amongst a lot of investors there in Kenya with the kind of results that they have been reporting.
Yes, and two banking stocks stand out for me, both NIC and Diamond Trust. Look, there's quite a bit of value there. If you look at it from an earnings perspective and in comparison with their peers, or if you look at the price to book value numbers, it seems there's quite a bit of there's deep value there. CFC Stanbic as well, and the insurances too. Also, perhaps the market is probably a bit skeptic coming from high interest rate regime, and so numbers what that did to the numbers. But going forward, we also like insurance stocks simply because of earnings expectations in earnings, especially being pushed through investment income.